This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. There we go. We got volume here. I did an update on my computer, and I tell you, it just drives me crazy with the OBS system, and it doesn't, update. Anyway, we're here. Let's get this thing going. Today's show is brought to you by Unstoppable Domains, the numbers, and I want to just celebrate you guys. I told you I would, and I'm going to right now. So, Shadow Puppet has skywalkerranch.crypto. I thought that was a creative, fun name. Shout out to you, Shadow Puppet. I know we had talked on some comments and things like that, but I wanted to celebrate you and your .crypto name. Adam Jolly David McKay, this guy's been on fire. He has great .crypto domain names. I can't read them because of the content that they are, but I think they're probably going to be very desirable names. So reach out to Adam Jolly David McKay in the comments section of the videos if you want to talk to him about his .cryptos. And one more I wanted to talk about too was LJSD06 has gotten virtual art museum.crypto, virtual art gallery.crypto, and virtual trade shows and gaming license.crypto. I mean, those are extremely creative. I think those are going to be hot, creative .crypto domain names. So as I said, I'm all about celebrating you guys as much as we can and trying to bring some attention to your domains that you bought for everybody to know about. So let's go on with the numbers real quick. Currently, right now, everything is falling from the sky like a manhole cover. So here we go. So BTC is $10,623.55. Ethereum is $350.04. XRP is 23 cents. Let's drill down on those numbers. 0.2385 is where we are today. The 24-hour volume is down almost 1% at 0.7. 24-hour volume is 1.2 billion. Very disappointed this morning with that number. And the total circulating supply is now 45 billion, 97 million plus. Those are your numbers. So, all right, really great stuff with the .crypto names. Keep them coming in, and I will certainly try to celebrate you guys as we do so. So, now, moving into this, I want to lay out that I believe we are on the road to becoming the new 1% class of the world. I really do, in the manner of wealth. That's exactly right. And I want to talk about this today from the point of view of the regulatory movements and changes and issuances that we have seen over the last several months. So let's take a look at that now. And it starts right here with Michael Val 5 Links. Shout out to you and everybody who sends information, bringing this to us from yesterday, I believe it was. Among the big headlines this week was the announcement of FIS and the clearinghouse are partnering to bring instant payments to small banks and credit unions. Here's where we want to drill down a little bit, because this is going to get really fun really quickly. Okay, so let's drill down on this. So here's the article right here that Michael Val 5 Links shared. And it says, among the big headlines this week, an announcement that FIS and the clearinghouse are partnering with to bring payments to small banks and credit unions. Well, first of all, what is FIS? Let's drill down on that. Well, this is from 2015, the Ripple Insights of August 18, 2015. 5 years ago, ladies and gentlemen. That's how long this stuff's been in the works here, for a long time, and even before that. Fidelity National Information Services, FIS, bought financial software multinational company SunGard, this is 2015, for $5.1 billion in cash and stock. FIS describes itself as the largest global provider of payments and banking technology. I'm sorry, I'm going to give you that one more time. FIS describes itself as the largest global provider of payments and banking technology. Acquiring SunGard creates a company projected to earn $9.2 billion in annual revenue. Now, we come down here, I want to highlight former Chairman U.S. Federal Reserve Alan Greenspan argued back in 2015 that the economy will benefit more from higher capital reserve requirements than from regulation to control bank loans and security portfolios. He recommended shelving the Dodd-Frank Act to curtail the recent decline in market liquidity. This brings us to the Volcker Rule. And we're going to get to that in a second. But before we do, let's refer back to the article real quick because we just found out who FIS is, right? But FIS is working with the clearinghouse. So let's go over this for anybody who needs a refresher. Theclearinghouse.org. What is the clearinghouse.org? Well, it's the real-time payments system for all financial institutions. The clearinghouse is a real-time payments platform that all U.S. financial institutions are using for payments innovation. So now we know who FIS is, and now we know who the clearinghouse is. Well, Ripple's partnered with FIS. Okay, so let's get that out of the way, right? So, all right, so now let's keep this moving. So, when we're looking at this information that Ripple partners FIS teams up with the clearinghouse to set up quick payments for U.S. banks, we know that Ripple is just buried deep in down there like a Georgia tick. I'm going to tell you, a hot match couldn't get them out of there. So then we need to talk about the Volcker Rule, because all of this is just like things that have happened with the OCC and the SEC. The Volcker Rule was relaxed recently, but let's talk about this because before we get to the Volcker Rule, I do want to mention this. Okay, let me mention this because you have the clearinghouse. And what was the article say? The article said clearinghouse and FIS team up for quick payments for U.S. banks. And then it goes in here, and it is to deal with the clearinghouse to bring a system of real-time payments to small and medium-sized U.S. banks and financial institutions. Going back to this, it says here, small banks and credit unions. Wow. Well, does anybody remember the Consumer Financial Protection Bureau when they came out with the final rule and made it effective on July 21st, 2020, just a few months ago? Well, let's go down to page 40 because that's where the love is, right? Page 40 is where the love is, where we see here that the Bureau has continued to monitor remittance transfer markets since the publication of the assessment report and observes that the most of these developments continue to progress. Then it cites here that Swift's GPI innovation, and going down here to talking about fintech and non-bank remittance transfers, it talks about companies like virtual currency companies like Ripple, and the use of XRP can be used to affect settlement of those transfers. This entire rule was about how they can make better the payments for cross-border for small banks and credit unions. Let's keep going. This was from July 22nd from the OCC, where they put out the letter that issued that federally chartered banks could now custody crypto for themselves and their clients. Let's keep it going. Then September 21st, we saw another letter come out, and it was so that the OCC could remark about letting federally chartered banks custody reserves and hold reserves, rather, for the issuance of stablecoins for their customers. So on behalf of their customers, I should say, who issue certain stablecoins. So people who have companies that have stablecoins that need to hold their reserves can now do it in a federally insured, protected bank. Boom. That's what's going on there. Let's keep it moving because then we get to the Volcker Rule that was recently relaxed. Back in 2015 on Ripple Insights, let's just understand the effects of the Volcker Rule from before it was relaxed very quickly here. So the Volcker Rule, which went into effect, this is back in 2015, this comment, last week after years of delays, is designed to stop banks from participating in speculative trading. That's harder to implement than it sounds, hence the delays. And then it goes into all of these different remarks about it. And I was going to read all of this to you, but I've done all the reading this morning. So basically, the restrictions were very heavy on the banks and what they could do for speculative trading. it has recently been relaxed. And let's talk about, well, first of all, let's talk about the rule will go into effect October 1st, which is very, very interesting to me. So we're not far away from that rule going into effect for banks. And easing the rule is good for banks because the margin requirements is expected to free up $40 billion of capital at banks. Unlike most companies, banks must hold regulatory capital to guard against unexpected loan losses, but the capital stands still, not generating any kind of return. So anytime capital is freed up, it is generally expected that banks will boost profits because they can deploy that capital into loans or securities or some other mechanism that can generate returns. Being able to invest in venture capital firms is another way banks can hopefully diversify their revenue streams without taking on too much risk. Being able to invest in venture capital firms is another way for banks can hopefully diversify their revenue streams without taking on too much risk. Yes, I read that twice, and I read it for a reason. Venture capitalist firms often invest in startups and small businesses that are usually too early or too risky for banks to directly extend credit to. But by investing in venture capital firms, which make a pool of investments in startups, banks can now indirectly extend credit to startups, something regulators believe is a positive for the economy, and reap the returns, which can be very attractive when a startup makes it big. The private markets are also another way to hedge risk, granted that the banks don't get too heavily involved. Well, I don't know about you, but isn't this timely that we are on the precipice of the birth of the fourth industrial revolution of technology and innovation, and all of a sudden, banks can play too? Yeah. There are no coincidences. The SEC comes out a couple days ago and issues a no-action letter in response to digital asset securities questions. On September 25th, when the Securities Exchange Commission has cleared the way for additional means of using alternative trading systems to facilitate the trade of digital asset securities. I don't know about you, but not only does it sound like security tokens just got to pass, but it also sounds like whether you thought XRP was a security or not, it just became a non-issue, didn't it? And I don't believe it is a security. But even if you do, you can go fly a kite. So the reality here is now I see the door open up for brokers. Now I see the door open up for your traditional broker to be able to make his way to have access to this market to invest for his clients. I see that coming hardcore very quickly. All right. Then the comment down here below to the no action rule, we see hats off from Brian Brooks to the SEC. Today, Securities and Exchange Commission issued a no action letter authorizing crypto security tokens to trade on registered exchanges. Yeah, I love it. And the reality is if you don't understand, here is the actual letter itself. Now, I'm not going to read it to you, but it does go in here and it breaks down. I do want to mention the difference between digital asset and a digital asset security. It doesn't provide the definition other than it says that there is a distinction between the two. I think it's important for us to touch on the fact that a digital security is a representation of an asset that happens to be a security, often an investment contract for which ownership verified and recorded on a distributed ledger. It's important to understand that. A digital security, which is subject to traditional securities law, is often referred to as a security token. For example, a digital security could be a share of a corporation or a portion of a note or a debt security. In some cases, it could also be fractionalized interest, which some commentators have discussed as being an especially suitable use case for the security token concept. Well said. And then that makes you think of fractional tokens or fractional stocks that you can buy, like Sologenics, an excellent example of that, and some others are doing it as well, and I believe even Robinhood. So now, what we're talking about here with the no action letter is the idea of security tokens that could represent stocks. What we're talking about here is security token that could represent commodities. What we're talking about here is a security token that could represent real estate. What we're talking about here is all the money is what we're talking about here. This is what we're talking about, all the money. XRP settling back-end stable coins, fiat dollars that are CBDCs because they got to be digital form in order to settle them, right? Supply chain trade, commodities like silver and gold and oil, securities, stocks and bonds, basically all the money. Yeah. And where would you go to see all the money get settled, especially when we're talking about security tokens, which would be like, stocks and bonds and things of that nature, the entire derivatives market? Oh, I guess you would head on over to a place like the Depository Trust Clearing Corporation. That's right, the DTCC. Well, let's check out what they do. It's an American post-trade financial services company providing clearing and settlement services to the financial markets. It performs the exchanges and securities on behalf of buyers and sellers and function as a central security depository by providing central custody of securities. Polysign. Yeah, DTCC was established in 1999 as a holding company to combine DTCC, the National Securities Clearing Corporation, user-owned and directed. It automates, centralizes, standardizes, and streamlines processes in the capital markets. Through its subsidiaries, DTC provide clearance, settlement, and information services for equities, corporate and municipal bonds, unit investment trusts, government and mortgage-backed securities, money market instruments, and over-the-counter derivatives. It also managed transactions between mutual funds and insurance carriers and their respective investors. In 2011, the DT settled the vast majority of securities transactions in the United States and close to $1.7 quadrillion in value worldwide. Thank you for coming. Like I said, we are on the road to be the next 1%ers in this world when it comes to wealth class. I'll tell you this. There's a reason that Ripple, Evan Schwartz, and the whole idea of all the money being a slogan for what they're after, because it truly is about settling all the transactions necessary for all the money of the world back in with XRP. Come on in. That's going to do it for me. Hit the like and subscribe, guys. Leave a comment below, and I'll catch all of you on the next one.